When most people think of tax deductions, they picture the usual suspects: charitable donations, mortgage interest, or student loan payments. But the U.S. tax code is filled with little-known deductions that can put serious money back in your pocket if you know where to look. Whether you're a freelancer, a parent, a pet owner, or even a job seeker, you might be leaving money on the table without realizing it. Some deductions are so surprising that even seasoned taxpayers overlook them every year. In this video, we'll uncover 10 unexpected tax deductions that could shrink your tax bill and boost your refund. These aren't loopholes, they're completely legal opportunities written right into the tax code. Let's dive into the most surprising deductions you probably didn't know you could claim. 1. Pet moving expenses for military members. If you're an active duty military member and you have to move due to a permanent change of station, you may be able to deduct the cost of moving your pet. While the IRS doesn't allow pet expenses as a general deduction, it considers pets as household goods for military-related moves. This means that shipping your furry friend to your new duty station could be a deductible expense. You must meet the IRS criteria for a qualified military move, but if you do, even your cat's plane ticket might be tax deductible. 2. Breastfeeding supplies for new mothers. Thanks to a 2011 IRS ruling, breastfeeding supplies such as breast pumps and storage bags are considered medical expenses and may be tax deductible. These costs must be claimed as part of your itemized medical deductions, which only apply if your total medical expenses exceed 7.5% of your adjusted gross income. While that threshold is high, families with high healthcare costs or birth-related expenses may qualify. This deduction is a small win for new mothers and a step forward in recognizing the medical realities of parenting. 3. Home office furniture and supplies. If you work from home, whether full-time or as a side hustle, you may already deduct a portion of your rent or utilities. But did you know that specific office items like desks, chairs, lamps, printers, and even decor can also be deducted? These must be used strictly for business, but if you keep good records, many of your home office purchases are fair game. The deduction applies to both self-employed individuals and remote workers under certain conditions. Just make sure your workspace qualifies as regular and exclusive, per IRS standards. 4. Out-of-pocket teacher expenses. Teachers often spend hundreds of dollars out of pocket each year for classroom supplies, decorations, and learning materials. The IRS recognizes this and allows eligible educators to deduct up to $300, or $600 if married and both are teachers, in unreimbursed expenses. This includes books, supplies, computer equipment, and even personal protective equipment, PPE. You don't have to itemize to take this deduction. It's an above-the-line deduction, which means it reduces your taxable income directly. It's a small but meaningful nod to the hard work and sacrifice educators make daily. 5. Job search costs. If you're looking for a new job in your current profession, certain job search expenses can be deductible. This includes resume printing, career coaching, travel expenses for interviews, and even postage for applications. The key is that the job must be in your current career field. New career paths don't qualify. Although this deduction was suspended for most taxpayers through 2025 under the Tax Cuts and Jobs Act, it still applies to certain categories of filers, like the self-employed. Keep your receipts in case the deduction becomes available again. 6. State sales tax. You probably already deduct your state income tax, but if you live in a state with no income tax, like Texas, Florida, or Washington, you can deduct state and local sales taxes instead. The IRS even lets you use an estimated amount based on your income and location, or you can keep receipts to deduct the actual total. Big purchases like a car, boat, or renovation project can push this deduction into significant territory. It's a great way for residents of income tax-free states to still claim a break on their federal return. 7. Gambling losses, up to your winnings. Here's a quirky one: if you win money gambling, you're required to report it. But you can also deduct your gambling losses up to the amount you won. This includes lotteries, casino games, horse racing, and even fantasy sports. You'll need to itemize your deductions and keep a detailed record of your wins and losses, with receipts, tickets, and a gambling log. You can't deduct more than you win, but for lucky gamblers, this deduction can significantly reduce the tax bite on your jackpots. 8. Charitable mileage and expenses. While most people remember to deduct cash donations to charity, they often forget about the smaller stuff, like the cost of driving your car for charitable purposes. If you volunteer for a nonprofit, you can deduct 14 cents per mile driven, plus tolls and parking. You can also deduct expenses like uniforms required by the charity, supplies you purchased for events, and even travel costs for overnight charity work, within reason. These smaller contributions add up and are entirely legitimate deductions if you itemize. 9. Tax preparation fees, for business filers. Although tax prep fees were eliminated as a deduction for most individuals under the 2017 tax reform, self-employed individuals and business owners can still deduct the cost of preparing their business tax returns. This includes the cost of tax software, bookkeeping services, and even part of your accountant's fee if they also prepare your personal return. If your accountant charges one flat fee, you can still deduct the portion related to business tax services. It's a good reason to separate business and personal tax costs when you can. 10. Guard dogs, for business use. Yes, your dog might be tax deductible, but only if they serve a legitimate business purpose. If you own a business with security concerns, like a warehouse or junkyard, and you have a guard dog trained to protect your property, part of your pet expenses may be deductible. You'll need to prove that the dog's primary purpose is business-related, and keep clear records of food, training, and vet bills. Family pets don't qualify, but a working guard dog? That could be man's best, tax-saving friend. Taxes don't have to be a mystery, and as this list proves, there are plenty of unexpected ways to reduce your bill, legally. These deductions often go unnoticed because they're buried deep in IRS guidelines or apply to specific scenarios, but when used correctly, they can mean the difference between owing money and getting a refund. From breastfeeding supplies to guard dogs, the U.S. tax code is more flexible than many realize. The key is staying organized, keeping receipts, and not being afraid to ask questions or consult a professional. Don't let these hidden tax-saving gems slip away. Take full advantage of what the law allows and keep more of your hard-earned income.